we come into cost of sales. Let's check from the additional information from the extract. Cost of sales is 1,110,000. It's here, 1,110,720. 1 million. We bring it here because remember we had returns which affected. Remember our returns also affect our cost of sales. Why? Because we didn't manufacture those goods. They must be taken back to the manufacturer. So if the selling price was 850 and the markup was 25, how do we calculate the cost of sales for the returned goods? I'm going to a clean sheet. A clean sheet, there we are. On the clean sheet, we are saying we are having this stock as 850. Multiply. Our markup, remember, it's 25%. So how do we do it? We say multiply by 100, divide by 125. 850 multiply by 100, divide by 125. We are having 680. This 680 is our cost of sales. This is our cost of sales for our goods. So what do we do with this 680? Do we add or subtract it? Basically, we must do what? We must subtract it, because we have taken the goods back to the manufacturer, to the person who produced those goods. So it means in actual effects, the cost, they must be returned at the cost of sales. We can't return them at the selling price. They must be returned at the cost of sales, the cost that you have incurred in order for you to have that particular goods. So we are saying cost of sales is 1,110,720 minus 680 rand. Then we'll be having 110 million and 40 and 40. 110 and 40. Yeah. Then we having gross profit. Gross profit. We are going to say cost of sales must be subtracted. Hence why it must be in brackets. It must be bracketed. Let's check then. We're saying 4,219,850 minus 110,000 and 110,040. Therefore, our gross profit is 3,119,810. 3,118,000. 3,119,810. Then we come into other incomes. Other incomes. Other incomes. Adjustment number 2. It reads as follows. Provision. The insolvent estate of El Nkosi paid 40 cents in the rent and transferred 360 directly into the bank account of Pearl Ltd on the 5th December 2013. This has been recorded. The rest of outstanding balance must be written off, and provision for bad debts must be adjusted to 3,090. Let's check the provision for bad debts this time. Is it an income or a loss? Provision for bad debts, this side, how much do we have? Provision for bad debts, it's 3,450. Provision for bad debts, 3,450. So it means we have adjusted with the actual costing of the provision for bad debts is 3,000 minus 3,000. Basically, we paid less than what we expected. So if we pay less, it means it is an income. 3,450 minus 3,090. Therefore, we'll be having 360 as income. So it means our provision for bad debts again in this instant is it's an income. It must come here. Provision for bad debts. Provision for bad debts. Provision for bad debts is how much? 360. Okay. The trading stock comprises of ornaments and vases. The 31st December 2013, a physical stock count revealed the ornaments on hand was 82,000. What do we deal with? How do you deal with this one? We start first. How much was our stock this side? Trading stock, 138,000. Then you come here. We don't have any trading stock here. So you must include here. Trading stock, 138,000. And then what happens? We had on hand, how much? 82. Therefore, this on hand must be subtracted because it's what we having. And then the physical count revealed 90 vases on hand. Vases are valued at the FIFO method. You are provided with the following information. Opening was this much. Purchases and closing. Therefore, how much is the cost price for vase for closing? How much is the cost price for vase for closing? How do we do that one? How do we do that one? How do we deal with that one? We are using FIFO method. How do we calculate that one? There are 90 vases. Remember we said 40 opening. We bought 160 and then we bought again 72. It means the total vases that were bought, it's how much? 160 plus 160 plus 72. It's 232 vases that were bought altogether. Plus the 40 that was there, we had 272 vases. And then when we have 90 on hand, it means 182 vases were sold. We sold 182 vases. What I'm just saying, it's like this. We're coming back to our drawing board. We said we're having 40 vases, of which is opening. And then we are having 160. This is purchases plus 72. Purchases 160 plus 72. 160 plus 72. Then we're having 232 vases plus the 40 of opening. This 40 of opening. It means we had how many vases in all? 272. So if we're having 272, then we are left with 90. This 90, it means the last one were not. This 90 comes from this 72 and this 90. So what we do, we say 72 by 525. How much do we have there? 72 by 525. We'll be having 37,800. Then we say 90 vases minus 72 vases will be left with 18. This 18 vases comes from that one of 160, which were bought by 550. So we say 18 vases by 550 will be having 9,900. So how much is our closing? How much is our closing? 37,800. How much is our closing? It's 47,700. That is our closing according to our FIFO.